So volatility is here, and we need to look at it in a very, very specific industry, industrial, indice, and FX world. For this, we're going to have a look and a deep dive over the next couple of weeks about why volatility will be the biggest player in your trading. Before we go any further, please do not forget to have a look at the disclaimer on screen. Everything in this video is general in nature. GO Markets does not know your personal scenario, nor your personal financial goals, and therefore none of it relied upon as any full advice at all. It is just general in nature only. So we've got a pause, and the president has blinked. The thing about what's going on at the moment with the whole post-Liberation Day volatility is that volatility is still here to stay despite what has happened. And that is, don't forget, vol is not just a downward movement, it's an upward movement as well. Seeing basically record upside movements that we haven't seen for the NASDAQ, for example, since the dot-com bubble, or for the S&P since the peak of the GFC, not even COVID. The Dow moving over 4,500 points in a single day shows you that that's not normal. That is absolutely abnormal trading, and we are still absolutely welded in volatility, because despite the pause on the tariffs, there's still a 90-day pause. There will still be something of some description. The president has blinked, and that is the only difference here. It also means you look into FX. The US dollar is not doing what you would normally expect it to do. In a currently heightened level of volatility, flows go that way. You see them move into bonds. But at the moment, that's not happening. US bonds are going to the highest level we've seen in 3 or 4 years. In fact, for the first time in the post-COVID world, we've actually seen the Australian yield go back above the US yield, which is a fantastic thing to be watching, which is what you would normally expect it to be. But the inversion has been an incredible problem, because it shows that overall, the risk off sentiment is not flowing the way you would normally want to. And that's why right now the volatility and the trade movements that are going on are hard to fathom, because the US dollar is not becoming the reserve currency, or at least inverted commas, the safe haven currency it normally is in volatility. And that's why at the moment, yes, you've got an upside. Yes, there's a possibility that some normality might appear over the next couple of weeks. But overall, this is far from over. And the biggest concern from an Australian-centric point of view is that the two largest trading nations on the planet are now having a punch-up. Watching Washington and Beijing go tit for tat is exactly the last thing that we need. So despite the fact that right now, volatility is up to the upside, and despite the fact that equities may have recuperated most of their losses from Liberation Day, this isn't over. And your trading therefore needs to be very aware that being nimble, being agile, and following the momentum is probably the way to go forward, because tomorrow is another day. And we know that the president doesn't just think in weeks or months or even days. He thinks in hours, minutes, and seconds. And therefore what is going on today could be completely reversed tomorrow.